What is inflation and why should you be concerned about it? I'm Marco Perry. Welcome to the Perry Platform. Canada has seen inflation rates that haven't been witnessed in decades, and if you haven't heard about it in the news, I'm sure you felt it in your pockets. The cost of living in this country is said to have skyrocketed. You can trace that back to about the start of the pandemic. Things like groceries are becoming quite expensive. People are having to cut back. Now, the question is, what is causing all of that? In short, the answer is inflation. Now, what's that? Well, inflation truly is the decline of purchasing power of a given currency over time. And to make sure we're on the same page here, purchasing power, you can picture that as simply the amount of stuff you can get with your money. Now, as time goes on, your money being able to purchase less things is inflation. That's the decline of your purchasing power. For example, 20 years ago, you could probably get a pack of gum for something like 20 cents. Today, it's probably costing closer to $2. That's a 10x increase, going from 20 cents to $2. And let's say you just had $2, you had a toonie in your pocket. 20 years ago, you could get 10 packs of gum. Today, you'll get one. It's not that the monetary symbol on that coin has changed. You still have $2. What's really changed here is the purchasing power. Things have gotten more expensive, and therefore, your purchasing power has gone down. And that's a big problem, because you can get less stuff for your money now. And before we move on, there's already a key lesson here. The numeric value of your money or your wages or your pay, it isn't the most important thing. It's actually the purchasing power that you need to care about. For example, you have countries around the world where the minimum wage in their currency is something like 1,000 units or 10,000 units, and in other places it's like 10 or 15. Having a bigger number isn't necessarily a good thing. Even in Canada, having a wage of 20 units or 10 units or 5, it doesn't really matter. What truly is at stake here is what you can get with that money. If the minimum wage was $5 an hour, but that was enough to get you all the things you needed, the prices were so low comparable to what we see today, well, you'd be fine. And you would much rather a situation like that versus one where your wage number is higher but the purchasing power is lower. That's why when we talk about things like minimum wage, the debate has to be far more encompassing. It's not a simple matter of just raising numeric values there. You have to do an analysis as to what's going to happen to your purchasing power. In fact, that's the only thing you should be caring about. The question isn't how do you get more zeros in your bank account. The question is how do you increase your purchasing power. Now, sometimes the best way to do that is in fact to increase your minimum wages and stuff like that. Sure, I'm not denying that. But what I'm saying is the analysis that we see far too often are just too simplistic to account for everything that might happen here. In fact, you could end up in a situation where things are worse for the average person now, that mandated minimum wages have gone up. It's not a perfect correlation there between increasing one thing and producing a positive good as an outcome. One has to understand that these wages are an expense for a company. And oftentimes, they're not going to want to get their bottom lines impacted by that. What they'll actually do is pass that cost back onto you as the consumer. And if there isn't any thought about that cycle, sure, your absolute wages might go up, but when it comes down to what you can actually buy out here, there might be no change at all. Now, having said that, unaffordability and income disparities are a major issue. It's just that there is much more nuance needed to have a healthy discussion about this topic. Now, pivoting back to inflation, one must wonder, how does the government even gauge this phenomenon? The most common method is something called the CPI, the Consumer Price Index, and what that is the government collecting certain items and adding them to this thing called a basket. And the basket is supposed to represent the expenditure of the average person. So they might have milk, they might have eggs in there, gasoline, and they track that basket and the price of it over time. If the basket goes up by 2% year over year, they'll deduce that inflation is 2%. Now, of course, there are flaws with that. Why? Well, the basket's not all-encompassing. And you as an individual might have a different set of goods that you care about that the government isn't tracking. For example, housing. That isn't typically included in the CPI. But housing is a major expense for pretty much everyone. Everyone cares about it. And if you did include that number into the CPI, I guarantee you the rate of inflation would be so much higher. It's just that the ways that we go about calculating it are exclusive. Not everything is a part of it, and many things that we care about are part of the picture. And if you ask me, well, is there motivation on behalf of the government and the Bank of Canada and agencies like that to select things that might not produce the largest number? Well, I'll say yes, because high numbers are a sign that things are going wrong. So, excluding certain crazy things that would jack that number up, well, I can see why there'd be a temptation to do it. Perhaps there are better ways to gauge this and to be real. That's something to think about. It could be something as simple as just rearranging this basket of goods to be a little bit more inclusive and to add things that people truly care about, like we just talked about. How about we add housing into that picture? What type of figures do we see after that? And that brings us to this next thing now, which is, well, what exactly causes inflation? We fully see the phenomenon occurring all around us. We feel the impacts of it. We see the prices going up, but what's triggering that? Now, there are many facets here. There are many things that impact inflation, and we can't talk about all of them. And certain things the government has more of a control over than others, but we will talk about some of the big ones. Now, this we saw a lot during COVID. It was inputs either becoming more scarce or expensive. So these inputs can be things like raw materials or wages, things of that nature. And on one hand, they become more scarce. Well, why is that? Well, maybe companies are not able to mine materials at the same rates as prior to the pandemic. The supply will go down, but demand will presumably still be the same. So that's going to cause some bidding wars to happen and prices will go up. Now, when those raw inputs go up, the end product that's going to go to you, the consumer, these costs are going to be passed on. The companies aren't going to take that hit to their bottom line just to maintain the price stability. They're going to increase the prices by whatever percent makes up for that. That makes up for the additional cost on their end. When input scarcity or simply input inflation starts to occur, that's bad news for everyone. It's bad news for the company, it's bad news for the consumer, and hopefully these type of things can be sorted out. They typically do tend to correct themselves with time, but in the short term, they could cause dramatic increases that just surprise everyone. Then another factor that can lead to inflation is on the consumer side, a rapidly increasing demand for a product. And once again, we can use COVID as an example. I'm framing it in that COVID context because this is where we've seen a massive jump in inflation. Before the pandemic, things were relatively steady, holding at about that 2% target. But since then, we've doubled that. So back to this consumer thing. One day we wake up and we say, hey, we want masks, we want toilet paper. The stores and the producers were putting out this output at a certain level, accounting for a steady demand. But overnight, if that demand triples and doubles and quadruples and whatever figure you want to put there, we're going to end up in a pricing war situation again, where all of that pricing power is on the side of the corporation producing the desired product. And since supply takes time to ramp up, people are going to be going crazy trying to attain these things at prices that are far higher than what you normally pay for. You see that a lot on the secondary market. It's pretty crazy, right? Like, I remember during the first wave, people were buying out toilet paper and wipes, and they were reselling them on like eBay for like 10 times the price you would normally get them for, and they were selling. People made a killing doing this. Now, of course, since then, supply has caught up, so it's not that big of a deal. But it's another short-run thing that can rapidly increase pricing. Now, this next point is one that's become quite contentious in America and in Canada. It's money supply, and in particular, the central banks producing far too much of it. This comes down to a supply and demand issue. The money in the economy finds its way to people. to consumers. And as more and more money is artificially pumped into the system, because units and entities like the central bank and the Bank of Canada are trying to sustain whatever is on the decline, demand for goods are going to increase because people have more money, because the economy is fit to the brim with it. But supply, as we know, takes time to follow suit. And sometimes it just doesn't. Now you can imagine what's going to happen there when you have all of these buyers fighting over a fixed amount of resources. Competition is going to increase the prices of those goods. There's just too many mouths to feed and not enough items, so the prices will go up to account for that. This type of situation can also be found when you do things like lower the interest rates to crazy levels like we're seeing in Canada, and even worse in places like Japan and Europe, where interest rates have actually gone negative. And the last item associated with inflation that I want to talk about is currency devaluation, and this one really is very scary. If you find yourself in this situation, things have gone terribly wrong. We've seen it happen in Zimbabwe before. Essentially what happens is residents, consumers, investors, they lose confidence in the local currency. For example, the Canadian dollar. Right now, I believe in it. If I have a good that's worth about 20 Canadian dollars, I'm happy to take 20 Canadian dollars for it. But if I feel like the Canadian government is doing something sketchy, or the central bank is doing something that's going to catastrophically destroy the value of this currency, I might not take that $20 anymore. I might feel like to account for that risk, I need more. Why take 20 Canadian when I can go on the international market and find the equivalent in American dollars or pesos or whatever I want? For me to take your Canadian dollars when I distrust the currency, you have to make it worth my while. Maybe I'll take 30 for it or 40. And you can say, well, the laws require merchants to accept the Canadian dollar as the official tender, but that distrust in the currency can simply be reflected in the pricing. They'll still take your money, but they'll just jack up the prices for the Canadian dollar. Now, in a nightmare situation, this devolves and becomes something like hyperinflation, where overnight, the value, the purchasing power of the money in your bank account just becomes extinct. For example, like we mentioned in Zimbabwe, I believe something like a loaf of bread is like 1 million units of the currency or something like that. Imagine something like that happening in Canada, where a loaf of bread is about $2, but nobody wants to accept the Canadian dollar anymore because the supply has run away, the demand is so low, and for a grocer to even consider taking this Canadian dollar, they're going to want 2,000 from you, or 2 million, or whatever it is. And this sounds crazy. It's hard to keep it proportional in your mind, but these things do happen in the world. Now, I don't think Canada is that vulnerable to it because we're a large global power with a strong economy. People trust the Canadian dollar, but for other countries, this is very possible. At the same time, you don't want to get too comfortable though, because while we may not experience the horrors of a hyperinflation situation, we could still compound the smaller scale inflation that we're seeing right now. So, moving on. Who suffers as a result of inflation? The answer is pretty much everyone, but to varying degrees, of course, and it depends what you're interested in buying and how inflation has affected a particular asset. Now, who benefits? Well, certain investors or businesses may benefit to some degree if the assets that they hold are appreciating rapidly. I believe something like a homeowner in many parts of Canada would fit this bill. Housing about 20 years ago was what one would consider reasonable. And since then, returns or the value of those properties have gone up something like 5x in certain areas. That's quite the benefit for individuals who are lucky enough to get into the market at those times. Now, for those who want a house right now, well, you're out of luck. You're on the short stick end of things. Finally, what can the average Joe do to combat inflation? Well, honestly, you do have to be invested in those assets that are appreciating. Otherwise, as we've talked about, putting your money in a bank account, sure, you'll still have your 2,000 today and 10 years down the road. It won't change, but your purchasing power, that will surely decline. The best way to combat that, honestly, is to invest and to have assets that are going to increase your purchasing power with inflation over time. And I do understand that's easier said than done. There are many people who don't have that luxury to invest, but if you're a Canadian, I strongly suggest you look into these registered accounts that the government offers at the tax-free savings account. Even if you can only afford to put away something like $50 a week, that will compound with time. And it's better than having it sit idle, not generating interest or returns on the stock market or something like that. Now, the question of what to invest in, that's a whole different matter. Do your research on that, but at the very least, look into it. Otherwise, inflation is going to be robbing you. You'll be a thief, a silent one, that's going to take away your purchasing power, and you'll only realize it after it's all gone away. And the final thing that one can do is lobby the government, let them know, let them hear your voice, that they need to take these matters more seriously. Of course, there is short-term pain to be had from measures that will correct for inflation. Doing something like raising the interest rates, not printing so much money, not handing it out to everyone. These things would theoretically do stuff to mitigate the runaway inflation that we're seeing, but they'll cause hardships in other areas. So once again, there is going to be short-term pain to correct for inflation. That's the truth of it. But you have to weigh that against something like the long-term gains. What can we expect to generate in the future by taking these painful actions right now? It's the idea of sacrifice, really. And that's contrary to what governments want to do, given the short term. You're operating on a 4-year cycle at best. Can you afford to have 3 of those years encountering economic turmoil and hardship for people, even if it will generate 10 years of great stuff after? Well, that might be great for the next person to come into office, but you getting voted out because of these short-term pains that you've enacted, it might not be worth it to you. That's one of the issues that we do face as a democratic country with these short terms. And don't get me wrong, I love democracy, I still support it, the best system, in my opinion, in the world. But it's not perfect. You have to realize that to operate properly within it. To turn a blind eye, to view things as black or white, it leaves you at the mercy of outcomes like this. Now, looking towards the future, I do hope that we can get these inflation costs under control, because they're going to be harming the Canadian populace at large to quite a large degree. I'm already hearing stories of many people not being able to afford groceries anymore because things have gotten just so expensive. It's a problem, and it has to be taken seriously at all levels of government. And with that, it now brings us to the end of our conversation for today. If you enjoyed the content, be sure to leave a review and share. It'll help us grow. And you can find me online at perryplatform.org and on social media at perryplatform. Thanks for joining me, and I'll see you soon.